is after each section, we're gonna hold questions.
Mhm.
Try not to do specifics, try to do questions about the general
Okay.
questions, and we'll go that route. Cola fit us into her schedule, but she's gotta go to DC, so
Mhm.
I'm gonna go through fast through the cash to keys, and then we
Okay.
can follow up with it at the end. So thank you, Cola, for making time. Appreciate you being here, and so moving forward, I'm ready. So let's go through the cash to keys. First and foremost, Annie Mac has a cash to keys program. We have a buy now, sell later if you own a house, and we have one we can pre-approve if you don't own a house. And the gist of it is, we turn your buyer into a cash buyer and put them in the top 30% of the offers that the sellers are gonna receive. And by doing that, you have to do nothing except introduce us to your client. We take care of it from there. We will introduce, we will tell them the benefits, we need to make sure you all are certified. But we're gonna go through the program so you don't have any general questions. You do not need to know the specifics, that's what we get paid to do. But we do need to be on the same page, they need to understand this is a benefit, not just for them, but also for you. It locks them into you. It locks them in to selling with you. It locks them in for buying with you. So now you get two deals instead of a lot of the flip flops that a lot of the clients are doing right now. It really kind of locks us both in and helps us grow our business. So let's go through the program. So cash offer. We will underwrite. I know there's a lot of notes here, but I'm gonna give the general synopsis. We will pre-approve your buyer, but we pre-approve them by collecting documents. We run them through an automated underwriting system up front to make sure that they have the substantial assets and credit to make sure that they're qualified for a cash offer. So if I'm going and Christy is my client and I have pre-approved her as a cash offer buyer, there's a extra form you're gonna have to fill out with the real estate when you fill out the form that shows them that we're a cash buyer, Annie Mac's guaranteeing the sale with cash from our home equity line of credit. We will still proceed with the normal VA, FHA, or conventional loan that they're doing, or USDA. Actually, we can't do USDA, so it'd be just FHA, conventional, or VA for the cash offer. We would proceed with it. If we don't close it by the date we say it's on the contract, Annie Mac guarantees to pay for it in cash, and we will close with the buyer later. That turns your buyer into a cash offer. That takes your buyer to the top 15–20%. The loan officer, being me, will contact the selling agent, explain it all to them, and let them know this isn't a gimmick. We're guaranteeing this sale. We're standing behind our buyer. That has actually saved me 3 or 4 deals. They didn't even do the cash offer, but because I made that phone call, we closed the loan on time. We just did a normal loan. We were good to go, but it actually locked them in versus the other 2 or 3 that were BHDA loans or loans that they couldn't guarantee with the products that they were producing. So flip through this. Let's go through and make sure. Questions at the end.
I knew you was saying, that's why I didn't, that's why.
Hey, y'all made me tell a question at the end. You made me take the shot. Alright, so. The approval. The approval is instant. Not only do I have to approve it, but we actually have a cash to keys team with Annie Mac. It is a set team. They look at the document, they verify everything that we did, they make sure the assets are there, they make sure that everything we presented, and they put their stamp of approval on. Once for a cash offer, it usually takes 2 to 3 days. Not during the weekend, can't give it to me on Saturday, expect it to be on Monday. These people don't work on Saturday and Sunday, so this is something we have to do up front. Okay? Go ahead, next, please. Once you're approved, we actually have an Annie Mac coordinator that will call and speak to the client and the realtor and walk you through the procedures of how it works, what you have to do, what steps, how the verbiage needs to be in the contract, and make sure nobody has any questions. Go ahead. All right. So go ahead, next one. We're just gonna go past this. This is the only change to the real estate contract. These 2 pages. And I call, or your loan officer will call, to explain what these 2 pages mean, which basically means Annie Mac is standing behind this deal. Doesn't change any of the terms for your contract. Doesn't mean you can't walk away if the picker is not right. Doesn't mean you can't walk away if the appraisal is not right. Or it comes in low or high. Doesn't change any of the real estate transaction. This is just our part of the transaction. Next, please. So we're gonna win the bid. Now, we use the term fee. We are gonna require, this is not for somebody who has $100 in the bank account and they have a 620 credit score. This is not your VHD buyer. This is for a strong buyer. This is somebody who has assets, money in the bank. Because they're gonna be required to buy a 3 to 3.5% within 48 hours of going under contract to the title company. And we hold that. That is their money. We don't charge it. We're not charging extra fees for it. But it is a requirement that we mandate because we are guaranteeing this with our home equity line of credit. We use that to protect ourselves. Because if they don't go through the transaction and we guarantee it with cash, guess what? We still have to buy it. So guess what 3.5% goes? Paying you to list the deal. So you're getting a deal either way. If they walk away, we're paying you that 3% out of their money to list the product. Make sense? Next,
That is,
is that it?
that's the next one.
Okay, go to the next one. Closing day, 99, look at this, 99% of the buyers will close with their normal loan. Did you see that? 99%. So what does it hurt to do these documents up front? Absolutely nothing. What does it benefit to do these documents up front to turn your buyers into cash buyers? It saves you a client and it gives you a deal that you're in competition of 3 or 5 other people, but yet your loan officer's calling, we're guaranteeing this with cash and the other people are conventional or FHA, something could go wrong. We're guaranteeing it. We're not guaranteeing that the appraisal is gonna be good. We don't guarantee the paper is gonna be good, but we're guaranteeing the deal, which is if we're on the same apples to apples, you guys are on the same price point, the same profit margin, why wouldn't they take our deal over theirs, right? Next. So this is the process. I kind of walked you through everything. We get the approval, we do the welcome calls, we do make the cash offer. We wire the EMD and we close on the home regularly or we close on the home for this. So let's go to the next one. And I know I'm going fast, but you guys, this group has been through it a lot. Keep going. All right, now we have buy now, sell later. Totally different. Not really. It is still a cash offer. It is still collecting the documents up front. It still has to be for a strong asset buyer, okay? The difference is they own a house. I just went to a client, literally, I'm not making this up, last night, they have a house. They have a house that they're selling for $450,000, it has $150,000 of equity in it, she has a 720 credit score. She has bills she wants to pay off to qualify for the other house she wants to buy, and she's got plenty of everything. So what we're doing is we're collecting all the documents. I will submit them today. It will go to our Cash to Keys program for the buy now, sell later. They will evaluate the house to make sure that they see the equity that the real estate agent sees. That she has the assets that I say she has, that she has the credit that I say she has, she has, everything's right. Then they will approve her. And this lady who just got a divorce and her alimony, an ugly situation that she is in. Now all of a sudden, I just took the stress off of her face. Now she's excited. She was crying at the kitchen table because now she knows she can go buy a house because this contingency she was losing with the other lender she was working with because the contingencies. Now the contingency is gone. So now, once we get her approved, which will take 5 to 7 days, it's usually what it takes for the buy now, sell later, because we have to evaluate the house and everything. Sometimes it comes back quicker, but I always say 5 to 7 business days, just so we look like superstars and not promising something we don't back up. But now she's gonna go buy a house. She's gonna go find it. She's gonna move into it. She's gonna list her house 14 days later after she has bought this house with home equity line of credit of Amy Mac. Now you've gotten both sides of the deal. You've looked like a hero to these people. And now you've locked in their friends, their neighbors, and their cousins because they're gonna tell you how nobody else can do this. And all of a sudden you, not me, not the lender, but you as a realtor were the rock star that brought this solution to them, right? Why wouldn't we want to do this for people that are buying and selling, especially in a market that we have today? How many people have lost deals because you have had multiple offers on a house in the last 6 months? Everybody in this room, right? I know one buyer that we have made multiple offers on houses with multiple real estate agents in here, right? But they don't want to do the cash offer, or they're not, it's not, if they don't have the financing and the equity, or they don't have the financing in their bank account, this isn't a product for them because we have to have that 3.5%. wired over to the town. That's something we can't get around. But this is a solution that would solve a lot of our clients' problems, especially in the market that we're getting ready to walk into, right? It's gonna get competitive, the market's getting ready to boom. It's definitely something we need to move forward. So. What I'm gonna do is I'm gonna table questions for Cassidy Keith, and we're gonna flip through these screens. I'm gonna introduce Cola Gallup. She's gonna come up, we're gonna talk about the home renovation programs. For a timeline for Cola, and then I will take questions about Cassidy Keith at the end when I do my last presentation. So Cola, if you don't mind coming up, please. Thank you.
Hey, guys. Thank you guys for showing up, whether you're here or online. I'm excited to be here. I worked for ODM for 5 years and left in 2019, and now I'm back. And very excited to be back because this company gets it. They get that you guys are needing what we do, and especially the education. That's one of the biggest reasons I came back. Where I was before and way before, they didn't educate as well as ODM does. They understand that knowledge is power. So that's why we are here today, not only me, but Brandon and Bill, is to educate you so that you can go out there and do more business. What we have are products. Those products are like tools. If you're not using the tools that are in your tool belt, you're not being the best that you can be, and you're not providing the best that you can provide to your clients. So we want to give you all those tools, and I got a whole bunch of them. You ready? Next. So what we're going to talk about is renovation loans and why you need to know about them. You may never, ever have a client that does a renovation loan. The odds are you won't, but you need to know about them enough that you feel comfortable about talking about them. And I'll tell you a story. I'm a storyteller. I had an agent down in North Carolina I worked with for 10 years. She said, I know you love these loans, but I'm not talking about them and I don't want to know them. Anytime I would get in her presence and say, oh yeah, I was working on a renovation, she do this, I don't want to, they're awful loans. They're terrible. They got the worst reputation. Well, we'll go over that too, but, she came to me one day and said, okay, I give up. Got to know about renovation loans. I'm like, what'd you do? I mean, it's been like 10 years I've done business with her. No renter. A buyer called her off of Zillow. Said, I'm interviewing 5 agents. And Diane said, I didn't have any buyers. I had no listings. And I was like, I gotta get this deal. She said, so I started filling her up with knowledge. I don't know what happened. The word renovation loan came out of my mouth. And I was shaking in my boots that she was gonna ask me about these loans, and I know nothing. So 3 days later, that buyer called her back and said, I've chosen you. And I said, well, what made you choose me? She said, you're the only one that told me that there is a loan that can help me renovate a property that's in disrepair. Or if it's a house I really like where it is, it's perfect, except I don't like the kitchen. So, I mean, I've always called these loans the butt loan. It's the one where you walk in with the buyer and they say, well, I like this butt. So these are the butt loans. So that's what this is about, is you being able to give the client enough information that they have the power. And I'm going to tell you something. They will not leave you. They know that you are a source of information they didn't even know they needed. They're not going to walk away. So let's talk briefly about the different programs. Next, there are 3 basic loan types: VA, FHA, conventional. You can go VHDA, but you're going VHDA, VA, FHA, conventional. Each one of those products has a version of a renovation loan. The first one was the FHA 203K. That was the first one to come out. HUD administers FHA, and HUD felt like, well, their responsibility is to preserve and protect America's housing. And this was back in the 80s. They were seeing that America's housing was aging. All the properties that were built in the 50s and 60s, our downtown Norfolk, our South Norfolk, our Portsmouth, those properties were aging. And a lot of people didn't have the money to fix them up. So they came out with a renovation loan in 1983. We were going gangbusters those first few years, because back in the day, up until 1989, investors could use FHA loans with 15% down. So we did a lot of those. But the FHA 203K, it was the first, it was the original. Then Fannie Mae and Freddie Mac jumped on board. The Fannie Mae is the home style, and that's the product that we use. It's the most common. Freddie Mac came out with one a few years ago, but it's just got some weird stuff. This one meets all the needs of a conventional loan buyer. And then a few years back, when I was with OVM before, so less than 10 years ago, we came out with a VA renovation loan. Now I'm gonna tell
Yay.
you, VA does not have a renovation. You cannot go to VA's website and look up anything about a renovation. I was on a task force and I have very minimal participation, but we went up to DC on a trip to VA to find out why they were not letting people do, the veterans use their eligibility to do a renovation loan. It turns out that there's an old law or a rule or guideline that VA will not guarantee that loan unless the property meets the value in the appraisal and meets minimum property standards. It would take an act of Congress to get that changed, and we know how that goes. So what happened is a bunch of investors, mortgage companies decided, we're gonna take this risk. So we take the loan application, we process the loan, we get the contractor's bid, we make sure the contractor's properly licensed and insured, we close on the loan, we hold back the renovation funds, they're doled out in draws, there's inspections done, and when it's all, and the appraisal is done subject to those repairs. When we order the appraisal, we send the contract and the bid. Hey, appraiser, this is what they're paying for it, this is what they're doing, what's it gonna be worth when it's done. So once it's all complete, we send the original VA appraiser out, and he makes sure, or she makes sure that the property is all work's done, it meets minimum property standards, and the value is still there. Then we can sell the loan off to Ginnie Mae, and we can submit to VA for our guarantee. Does anybody not know what VA guarantee is? It's like PMI and MIP. Guarantees us, if they don't make the payments, we don't lose any money. So there's minimal differences between these, and then there's vast differences between these. There's two different types of renovation on the 203K. One's called a limited. It used to be called a streamline, but there was a whole bunch of us that pounded HUD and FHA. Please stop calling this a streamline, because there is nothing streamlined about it. The only thing is you're limited as to what you can do. You can't do anything structural on a limited. You can't go over 50,000. A lot of people think that the bonus is that you don't need a HUD consultant. It's not a bonus, trust me. A HUD consultant is like having somebody oversee that job to make sure that the work's being done, that the contractor is staying on task. Had a buyer call me one time, he was so upset. I don't know what to do. The guy just installed the microwave over the stove and it's 6 inches off center. What am I gonna do? I'm afraid if I say anything to him, he's gonna get mad and walk off the job. No problem, we'll call our little HUD consultant. HUD consultant went out there and he said, Mr. Contractor, this is improperly installed. I need you to fix that and then we'll pay you your job. So they're involved from the day they do the inspection until the very last draw is issued. So they're a blessing. They're also gonna be the one that's gonna go to that house. As soon as you're under contract, we're gonna assign your HUD consultant. They go to the house. You can go, the contractor can go, the borrower can go, their mom and daddy and the kids can go, whoever. But they're gonna walk through that house and you're gonna know within a few days everything that has to be done for that property to meet minimum property standards. You get home inspections, you don't know. I can't tell you how many times, an agent has sent me a home inspection, says, is there anything on here that I'm missing that, that the appraiser might catch? No problem. Type consultant's gonna tell us. We're gonna know right away. Not only that, but he tells you what it should cost according to building industry standards to get those repairs done and broken down into materials and labor. Now, let's say the house is fine, but this is a butt lump. The guy liked it, just didn't like the kitchen. So we're gonna replace the kitchen, new kitchen. So the HUD consultant's gonna send over in his specification repairs, kitchen cabinets. Let's say he comes in at $10,000 for cabinetry, $3,000 to install. Once you've reviewed that SOR, the specification repairs, you're gonna take it to your contractor. Contractor sits down and he goes, those cabinets you picked out are a lot more expensive than 10,000. We probably need to change that. Or, your cabinets are gonna be a lot less. You're getting IKEA cabinets. But we're gonna have to pump up that labor because I gotta put those suckers together. So once all those numbers that are reviewed and everybody, the contractor and the buyer agree to them, they send it back to the HUD consultant. Remember, he's protecting us, he's protecting that buyer, and he's protecting especially us. VA, FHA, or Fannie Mae, depending on, to make sure that there's enough money in that deal, in that bid, for if the contractor decides to walk off, a new contractor can step in, there's enough money to finish it. Any questions on that? Okay. So that's my spiel on the standard. Limited to me is great if all they need is an HVAC. I've got one that all they're doing is $12,000 fence. I want to see that thing when it's done. The Fannie Mae home style, it's very similar. The only difference is on a Fannie Mae home style, you can do luxury.
Ooh,
So what's luxury?
an outdoor kitchen?
An outdoor kitchen, an indoor pool, a pool, a sauna, a tennis court.
Really?
I will tell you that I had a client that did a kitchen renovation. When the bid came in, I'm like, that's a whole lot of money for a stove. It was a Wolf Range.
Ten.
But was fine with it. They had no problem with it.
I mean,
So
that's
they
a
don't
$12,000
consider
stove.
Yeah,
I want that.
it was beautiful. I will tell you that.
Pre-approve you right after the class.
And then, and then the last one is the VA renovation loan. The VA renovation loan is you can use it for everything except for, we won't allow you to do an addition. There is a maximum of 75,000. It's more for fixing or replacing mechanical systems and taking care of, change outs like you don't like the kitchen or, cosmetic type stuff. But it's a really cool loan and now veterans can buy foreclosure properties and use their eligibility. So for the same reasons also that a client would go regular FHA, regular conventional, or VA, the same thing applies on the renovation loan. The conventional is for a buyer that has, a minimum of 5% down, well, actually 3% down, and that's a little caveat too. You guys familiar with a Fannie Mae Home Ready, where they can do 3% down if they're a first-time home buyer, but there's income restrictions? What are the income restrictions now? Last time I was like 69,000, it's 80.
Yeah.
Guess what? Now on the Home Ready home side, there's no restriction. And how I found that out is I had a buyer we were working with on a Home Ready, and when the underwriter calculated the income, they did a little different than I did, and they came in like $600 too much. So we flipped it to a home style, Home Ready, and put in 4 ceiling things. It's a tool, y'all. Use your tool. Gotta know how to use these tools. Now I'm gonna tell you a little fun fact about the FHA 203K.
Oh, that was slick.
Huh?
That was
I liked it a
slick.
lot.
It was slick.
That was slick.
This one's even better. I was working with Brandon over 10 years ago, more like 15 years ago, walked into the kitchen and there's a loan officer in there and she upset. I was firecracker. She's got a sale at $200,000. The appraisal came in at 190. It was a short sale and the bank would not reduce the purchase price. They said, no problem, we're gonna go ahead and foreclose and we'll sell it. She's like, this guy really needs this house. I can't think of anything we can do. This was the first time that this little thing popped into my head and I was like, maybe there's a way we can use a renovation loan. You know what? FHA, let me go look at this. I go look through the guidelines. FHA guidelines are crazy. They're not black and white. Sometimes you're looking for not what you can do, but if it doesn't say I can't do it, then I should be able to do it. So I get Angie in my office. We get Mr. Smith on the phone. Mr. Smith, is there anything you're gonna do to that house in the next 3 to 5 years? He said, yes. I have to, as soon as I close, I have to get the carpet out of there and get hardwood floors put in. My daughters have severe asthma. I'm like, do you have a bid? He said, yeah, 7,000. All right, y'all ready for the zinger? On an FHA 203K, we can lend up to 110% of the appraised value. So we got an appraised value of 190, right? What's 110% of that?
200,000.
209.
Wow. You're right.
209. Now the seller's gonna get their 200,000. He's gonna get his floors financed. So we told him, we're flipping you to FHA 203K, we're gonna finance your hardwood floors. He started crying. What we didn't know is his wife had passed away 6 months before. He had to put all this money out. He was young, 3 young daughters. So he had all this money he had to pay for the funeral and all that. Then he needed his down payment to buy this house. And then he had to scrape together the 7,000. He said, it's cleaning my bank account now. Now I have that as a cushion. And guess where the house was? Next door to his late wife's mother. So I'm gonna tell you what, that was a huge win-win for us. But the reason why HUD lets you lend up to 110% is because HUD is there to what? Preserve and protect America's housing. And they were well aware back in the 80s that doing, if you gotta replace windows for $10,000, it's not gonna give you $10,000 in value. There were already windows there. So that's why they give us that extra little 10%. Any questions so far? These are fun loans. So anytime you ever get an appraisal that comes in low, say, I think Cola's got a magic wand or a big old hammer that she can figure this one out.
And she says this is fun when she waves it.
Yeah.
It is a blast. So they're just cool loans. They're just another tool, but I will tell you, the way that we do this at OBM is I partner with our loan officer. If Bill calls me and says, hey, we got one that they're looking at this house and they think it's gonna need a renovation loan. Okay, give me the name and the loan number. What's the address? Let me look at it. And then how much do they think they need renovation? Now, if they tell me $10,000 and I'm looking at a house that's gutted, I'm gonna be calling back saying, I think 10,000 is gonna do it. But I run the numbers and send them over to Bill. And if the client gets under contract, he and I work in tandem. I am his renovation loan partner. You don't lose him, you gain me. Just to make sure that these loans, they go through smoothly. The reason they have a horrible reputation is because agents will use a loan officer or a lender that doesn't know how to do that. We do these in-house. I have a renovation operations team for the first time in my total career that handles the contractor approval. They vet the bid. They do everything. Everything I let them do, because I'm still a little bit of a control freak.
No.
So just a little bit, at least Dakota's
I do have a
trying to like
question.
me really hard.
How do you guys handle your contractors? Do you guys have it on an already approved list?
Nope, there
Or
is
you
no
can bring
such
in,
thing. So the contractor must be properly licensed and insured.
okay,
And then when they call me and tell me who the contractor is, I look them up on Depor, just like we look up agents or cosmetologists, and then they send over their insurance. I mean, I had one with this company in North Carolina, RQ Contractors or something or other, and they send me over their bid and I look them up and I'm like, I don't see your licensing. Can you send me a copy of the license? oh, well, we work in tandem with this contractor over here. Oh. That don't work.
Mm-mm.
You can't use another contractor's license. The contractor doing the work must be properly licensed to do that job. In Virginia, it's a Class A, Class B, or Class C. The only difference between those is the amount of experience they had at the time that they got their class license and the dollar amount of the project that they can do.
Mhm.
So that's it. Now, we are prohibited from referring a contractor.
Mhm.
And it has to do with the liability that we take on as the lender and. But the HUD consultant, he's got the best. I mean, he's got this one contractor in Newport News that I know, he will only do stuff that Danny sends to him. And he'll have $100,000 job, 5 draws to do it. And he'll call me a month later and say, okay, I'm ready for my draw. Okay, how much you need? The whole thing, I'm done. He don't have time to wait for draws. I gotta get this work done, so I can move on to the next one. And they do quality work. The contractors he uses have to pass his muster. So they're good contractors. Any more questions? Yeah.
So obviously, if you think that the appraisal is gonna come in a little low, it's better to get pre-qualified with this and any other one, right? But what happens if you weren't expecting it and it does happen? How long does it take to switch loans?
Hang on.
So are you talking about if we're going with a conventional or that one and it comes in low? It's real easy,
Okay.
very quick. We reach out to the appraiser, we tell them, okay, we need to flip this VA appraisal to an FHA 203K or the Fannie Mae to a 203K. Our team goes in and changes the loan, and opens it up so I can go in and run the figures. Probably, he probably added maybe 5 hours. to it.
Oh, good, okay, that's good to know. Very good to know.
I'm good.
I like it, I like it, I like it.
All right, next, I think, unless there's any more questions.
Not so far.
So remember, we talked about this in the very beginning. Just mentioning that you offer these renovation loans. I can tell you that we did one for a young lady that bought a little Craftsman in Elizabeth City, and I mean, it was awful. And when she was done with that thing, the agent and I promised her we would, do her open house for her. The agent and I are standing in the dining room, and this girl walks in the front door. She goes, "How did you afford this? And Louis Vuitton bags. I know how you spent. Where did you get the money to do this?" She said, "I financed it. My agent turned me on to this loan officer, and she helped me finance all these renovations. It's included in my loan." So, and that girl got pre-approved and she closed. So, put it out there and just see what happens. Like I said, be the expert, be their hero. Sometimes it isn't about the house, it's about where it is and what they can do with it.
You're,
I'm done.
you made it.
Well, first and foremost, thank you so much. Now, I will tell you, I have probably 3 or 4 right now in the pipeline. I guarantee you guys have 3 or 4 in the pipeline that are in that 175 to 250 range where they're trying to find that house that has everything they need. But if you go too high, they're out of their debt to income and everything. This is a perfect way of finding that 210 house and turning it into a 230 house by doing the renovations, but then you go to 110% and capitalize. So this is definitely something, if you have questions, call me anytime.
Yeah.
I can get Cole on the phone.
Now we can get those
Talk
hot
shop.
mess expresses.
Yeah, definitely a good fix. So definitely keep this in your back pocket. Cole,
Yeah,
thank you so much.
And now Brandon.
All right.
All right, following up after that. So good morning, everybody. I'm Brandon Dixon, Vice President of Sales at OBM. I'm gonna talk to you guys a little bit about non-QMs today, non-QM loans today. The reason that I'm gonna kind of teach you a little bit about these is, so when you hear like a borrower say, hey, I can't get approved because of X, Y, and Z, or hey, I'm self-employed and I don't claim my income, at least you can say, you know what? I think Brandon mentioned something, maybe I need to call Bill and see what he can do. So you can go ahead to the next slide. Before I start the non-QM information, want to go over our OBM community lending program. So, we have a community lending program that is based solely on the address. So there is no first-time home buyer requirements, there is no income restrictions, but these addresses are eligible for a rate that's usually about 2% lower than what the market rate is. So, listing agents in here, if you have some listings, make sure you're contacting Bill. He can run it through our database to see if it is one of the eligible properties. If it is, you can put that right in your MLS. You know, this property is, community lending eligible. Please contact, Bill Loudon for reduced rates. Maybe help you sell that house a little bit quicker. So again, the no income restrictions, the no first time home buyer requirements, is a huge thing, especially with community lending. So just keep that in mind when you're listing properties. All right, so what is non-QM? Does anybody know what non-QM means?
Non-qualified.
Non-qualified mortgage, correct, meaning it doesn't fit in Fannie, Freddie, FHA or VA box. So for whatever reason, whether it's debt to income ratio, whether it's their loan to value, whether it's their employment, it doesn't fit in the regular traditional box. You can go ahead to the next slide.
Maybe.
All right, so our non-QM options, these are our most popular ones. So we have a bank statement loan, ITIN loans, 1099, asset qualification, DSCR, doctor loans, no ratio program, and professional loans. So pretty much have every single loan that is out there. If your borrower has good credit and they have a little bit of funds, then we have a loan for them. So you can go ahead to the next slide. We're gonna get into each of them specifically here in the next couple of slides. So self-employed, how do self-employed borrowers qualify for mortgage? So
sorry.
everybody in here self-employed? And you
Yep.
guys claim all of your income and none of your write-offs, right? Because you want to pay as much taxes as possible. No, that's not what happens. That's, you have a good CPA who makes sure that you're writing off all your expenses and your income, your taxable income is as low as possible.
We pretend
So-
like we're poor.
We had to have a solution for self-employed borrowers. So, next slide. All right, so first one is the bank statement program. So, we have a bank statement program, you can use either 12 or 24 months personal or business bank statements. And we can basically take, all the cash flow in those bank statements, calculate it, and come up with a qualifying income for those borrowers. So if you have a borrower who, again, doesn't claim a lot of taxable income, but they have good cash flow on their bank statements, we can have a loan for them. There is a default ratio, usually about 50% for expenses that they'll deduct off the top. But if you have a CPA that's like, hey, I've prepared their tax returns for the last 2 years, their expense ratio is more like 30%, then we can use 70% of all of those deposits. So you can go up to 90% loan to value, credit scores down to 620, 2 years self-employment, loan amounts up to 3 million. And you can use it on owner occupied, second homes or investment properties. It's a great loan. If you have anybody like that, like I said, get in touch with Bill. They'll send over the bank statements. We can put it in the software and it'll literally in a couple hours spit out exactly what kind of income we could use.
Ask a quick question?
yeah.
I'm so sorry. On
No, you're
that
good.
last one,
Yeah.
the last thing said,
Mhm.
interest only loans?
Yes, absolutely. Yeah, there's some interest only options. Yep. So if that is something that your borrower is like, hey, I think rates are gonna go down or something like that, I want to go with interest only for now, there is absolutely some interest only options. And there's a lot of interest only options on most of these non-QM programs. ITIN loans. So ITIN, anybody know what ITIN is? Individual taxpayer identification number. Yep, so that's for people who are here that don't have a social security number yet. But the government assigns them an ITIN so that they can pay taxes. So we have an ITIN program, self-employed or 1099, loan to values up to 80%. We can go up to debt ratios up to 55%. They can get gift funds. There's no seasoning on bankruptcy, foreclosure or short sales, primary or second homes, and we can do credit scores down to 600. We also have a program at OVM. It's a pilot program with Fannie that we can do ITIN programs on regular conventional loans. So if you have a borrower who has an ITIN who has good credit, and good debt to income ratio and stuff like that, we can take them regular conventional instead of the non-QM option.
So what if they don't have credit? Or at least here?
Yeah, so on the non-QM programs, they have different ways. So we can use non-traditional credit.
Okay.
If they have like rental they've been renting for the last 12 or 24 months, we can get a rental history. If they have like, obviously a cell phone bill, utility bill, car insurance, things like that, that we can at least put together a case and say, look, they're paying bills now, they know about paying obligations on time, and they are doing, they are paying as agreed. So that's kind of how we do with non-traditional credit, with the ISIN programs and other non-QM programs. This is a really popular one. Everybody in here, 1099 income, right? What if I told you we could do a loan for you at 100% of your 1099 income? That's what this program is. So we don't have to take off any expenses. We can use your 1099 income. It's good, obviously, for realtors, for subcontractors, people that are in the entertainment industry, and anybody that gets 1099s. So really cool program, no tax returns required. We don't even want to see them. Minimum credit score is 600. You can go up to a loan amount of 3 million. It's for purchase or any kind of refi, rate and term or cash out, and you can do it on primary, second homes or investment properties. So it's a really cool program that we use a lot, especially with, agents and people that are in the entertainment industry. All right, the asset qualification program. This is for your borrowers who have a lot of assets. So this program, if you have 125% of the funds you need to close, there is no qualifying. That's it. You just show that you have that 125% and there is no income, there is no employment. It's 20% down, but that is all they need for qualifying. It doesn't have to be liquid. It can be in IRAs, it can be in retirement accounts, it could be in trusts. There's multiple different options of how the funds can be in. Yes, sir.
Can you clarify?
Questions at the end, actually. No.
Thank
Can you
you.
clarify the 120%?
Yeah, so the 125% of the funds needed to close. So once you take in the purchase price, you take in the closing costs. That's gonna be your final number that you need to have, you need to multiply that by 125%, and then that's what they'll need to show in their bank account.
Oh, I was thinking purchase price, good, thank you.
Yep, so your purchase price plus the closing cost is what they'll need, and then you take 125% of that. So you use this program a lot, especially with self-employed borrowers, or people who have maybe just sold a house and, they're in between jobs or whatever, so they don't have the income or employment. But they do have the assets from the home sale or whatever the case may be. So we have a loan for them. Again, credit score 660. There is an interest only option available, and you can do loan amounts up to 3 million for primary, secondary homes and investment properties. So yes, sir.
Can a all cash paid asset like a home apply towards this, or it needs to be in investments?
No, absolutely. If you're gonna sell a house and you're gonna net, $1 million or whatever from it, once that money is shown in your bank account, then we're good to go. So that'll be a condition of the loan. So we can get the whole loan going, and then the final condition will be, hey, show those funds deposited in your account. That's the last condition. We get it back to our underwriting and we can close.
Mhm.
All right, so non-traditional borrower. This one is a really fun. Oh, I'm sorry.
I just had one question.
Yeah.
So, on the 1099 and on the bank statement, it doesn't say the 20% down. What's the down payment on those?
So the bank statement starts at, all the non-QM loans are gonna be at least 10% down. So the bank statement loan starts at 10% down, depending on credit. Obviously, the higher your credit score, the lower, the down payment. So the 1099 program, I believe, is up to 90% as well. All right, non-traditional borrower. So this is a borrower who is in between employment, or they don't have the income. Again, self-employed, somebody who is just selling a house and downsizing. If you there is no income, there is no employment qualification. So as long as you have 20% down, then we have a loan for you. This loan, I'll tell you a quick story. I had a past borrower, who I've done a lot of loans for, and they were self-employed, going through some litigation with their partner. And they're like, hey, I haven't filed tax returns in the last 3 years because my attorney says I can't until all this litigation is done. And they're selling, a $1 million house, trying to move into like a $600,000 house. And they're like, we don't know what to do. And I'm like, we got you. So this is a program that we could do. They were selling their house, and netting almost enough to pay for it in cash. So they couldn't do the asset qualifier, but they did have at least 20% down. So this program, no income, no employment. Kind of like, back in the day when we had stated income, stated asset. This is just no income, no employment. We don't even disclose it on the application. So it's just your funds and, a cool thing about this, up to 6% seller concessions, loan amounts are up to $2 million, up to 80% loan to value for primary and second homes. So this program is specifically for primary and second homes. The next slide I'm gonna show you is going to be for investment properties, which is one of our most popular programs. So the DSCR program, and basically what that is a fancy name for a cash flow, investor cash flow loan. So if you have an investor that is looking to buy a property and we know that that property is gonna rent for $3,000 a month. And the loan that we're doing, they can get a payment roughly about $3,000 a month. We can do a loan for them. There is no employment, there is no income again. It's specifically based on the cash flow. So the higher the cash flow, obviously, if we have a payment less than 3,000, then that's gonna be better. You get, better rate. And if it's higher, say, we have a property that's gonna rent for 3,000, but the payment's gonna be 4,000. We have an option for that. We have a no ratio DSCR loan. Now, it's gonna require a little bit more down payment than the 20%. But we do have an option for that. But it goes down to 660. You can do cash outs as well. So if you have an investor that is like, hey, I wanna do a cash out to buy my next investment property. And it doesn't have to be necessarily that they can't qualify with employment and income, but if they're like, I just don't wanna have to go through all of the craziness of providing my tax returns and leases and all that stuff for experienced investors, you can use this DSCR program. There's no limit on the amount of properties that they own. And it's a lot less invasive than a traditional loan. So another cool thing about this is the investor can close in the name of an LLC. So traditional loans, you have to close in a personal name. Your DSCR program, they can close in the name of an LLC, which investors love. So this is a great program for anybody that works with investors. Make sure you're running that by them, because at the end of the day, they're just worried about cash flowing. As long as that property is gonna cash flow, they know when the market comes back a little bit, when rates come back down, they're gonna refinance and they're gonna gain even more cash flow. So sometimes it's about just getting them in that property, and this is a great program to do it. Yes, sir.
We actually closed one in here with somebody that's actually in here right now.
Awesome, okay.
But we've had some changes to DSCR since then.
Yes.
Like we are now a.
Yes, so we are now delegated with our DSCR loans and with our non-QM programs. So we do those in-house. We don't have to send them to the investor to underwrite anymore.
Yay.
So, yes, this is the first company that I've ever heard of that went delegated with them, because there is a risk. Because there is no regular traditional outlet to sell these loans. If the investor doesn't take it, we keep it. So we got to make sure that it meets all the qualifications and stuff, but we were confident enough that, hey, we can do this in-house, save a little bit of time, save a little bit of that control, like Cola said, we're control freaks. We want to stay in control of the process. So this is going to help us do that. Yep.
The down payment on this?
20% on the DSCRs. Yep.
That's not bad.
Not bad at all. And obviously, if you're putting more down, rate gets better. All right, next slide. All right, our doctor loan program. So we have a doctor loan program that anybody in the doctor field can do 100% financing up to $1 million with no mortgage insurance. We have ARM rates available and fixed rates. So a lot of doctors are very astute, and they're like, hey, we're in a a declining rate environment in the next 3 or 5 years. Rates are going to go down. So I want to do an ARM. The ARM rates are very, very sharp. They are very competitive. Especially with no mortgage insurance. That mortgage insurance on 100% financing can be hundreds of dollars a month in the traditional loans. But no MI on this program. It's available for purchases and rate and term refinances. And if you have any questions about doctors, it can be doctors. We've done physician assistants, nurse practitioners, dentists, orthodontists, anybody that has that doctor level education, we can go ahead and give them this loan for 100%.
This is first home only,
What's that?
first home only.
No, it can be, it's for primary residences. So if
Okay.
they're moving up or something, we can still do this loan. Another cool thing, they have like, you know, different caveats, like you have a doctor who works at multiple different emergency rooms, it gets 1099s for all of them. We can use that income just as W-2 income, as long as we get a letter from the employer that says they have no unreimbursed business expenses. So that's something that you can't do traditionally.
I know in the last presentation I attended that you presented this, you mentioned pharmacists as well, and I just wanted to include them because
Absolutely.
I found that they are often not included in most of these.
You're right.
So pharmacists was a big one.
That is a big
Good call.
one.
Yeah,
Pharmacist,
absolutely. Yeah.
nice.
You got doctors, nurse practitioners, pharmacists, and
Dentist.
Goodness, physician's assistants, dentists, orthodontists. And I'll get, we have a flyer on it, so Bill, you
What
can
about
send them a flyer that
chiropractors?
has all of their, what's that?
Chiropractors.
Chiropractors, no.
No
Not in this program.
chiropractors.
Nope.
Can I get the, yeah, if you could
I
get
don't
the,
know why, I don't know why chiropractors, you know, they don't.
I would love to you blast it out.
all right, great. If I,
Doctors, I don't know.
if anybody would like that flyer, let me know.
Yeah, absolutely, we'll send that out to you guys, so you guys have all the eligible,
Perfect.
yeah,
All the eligible
doctor
peoples.
specialties, yep. Another cool thing is if like they're not gonna start their job, you know, for 90 days or 120 days or something like that, we can close as long as we have an offer letter. And get them closed before they start their new job.
That's nice.
All right, next slide. All right, this is a really cool program. So this is our professional loan program. So this is for all of your other professions. So you can use it for doctors. You can use it for, you know, physician's assistants and nurse practitioners and stuff, but also it's anybody with a master's level education with credentials. So we've done them for financial planners before. We've done them for, like I said, orthodontists. We've done one for a superintendent of a school district. Anybody who has that master's level education and, you know, some credentials, CPAs, we've used this program for. They can do 100% financing up to 750,000. And then 5% down up to $1 million. They have flexible loan terms as well. Again, no private mortgage insurance, which is huge, and supporting transitioning professionals so their employment can start within 90 days. So this is also a great program. Right here, they have the medical professionals, medical doctor, doctor of orthopedics. Man, you're gonna quiz me on it. Dentist, nurse practitioner, physician's
And I'm
assistant.
sure we will get a flyer on that one
Yes,
as
you
well.
will. Yes, absolutely. So,
Sorry, text with though.
but if any of these, you know, if you have a borrower who is in these fields, just remember, hey, let me call Bill. They have a special program for that. You know, that will help them and give them a great deal so that they can buy the house.
Everyone will be receiving an email directly from Bill
Yes, for sure.
with provided flyers
Yes,
for
absolutely.
all.
I'll make sure I
people.
stay on them about that as well. All right, next slide.
People are online asking for the slideshow too, Bill, can you?
Yeah,
Yeah,
We can definitely share it.
Email.
Yep.
yeah,
mhm.
Bill will send everyone the slideshow.
Yep, so out of all these loans here, bank statements, I-10s, the 1099, the asset qualification, the DSCR, doctor loans, the no ratio, and the professional loans, who thinks that, you know, they can go ahead and get some more deals,
the
qualify
interesting
some more
slide.
buyers.
I literally
Yeah.
just texted two of my clients while I'm sitting here.
Oh, that's awesome, good deal. So, you know, just contact Bill, we also have a no deal left behind desk. So if we're looking at a file, we're like, hey, there's no way to make this work, we can send it to the no deal left behind desk, we have a committee that looks at it and says, hey, can they be eligible for a DSCR program, since, you know, if they don't qualify traditionally? Like, do they have 1099s, or do they have enough money in their bank statements, you know, cash flow to go ahead and qualify them? So we want to try to capture every borrower for you guys. We know how hard it is to obtain clients, so we want to try to help every client that you guys have. All right, next slide. I think that the operational excellence that we went over before. We pride ourselves on this and work towards this and continue to work towards it, but almost 70% of our loans are clear closed within 3 days of before closing. Try to make it a lot less stressful for buyers and yourselves, you know, for closing. So, you know, please let us know if there's anything we can do. Bill does a great job. So, but if you guys need anything, I'm always available as well. So, but appreciate all you guys' time, and hopefully you guys can get some more deals.
Any more questions for Brandon before you head back to the office?
Yes, any questions?
You
Nope.
live in Richmond too, don't you? Or is that?
I did that yesterday.
You did.
Yeah.
Okay.
Cola's headed to DC.
Cola is headed to DC, Brandon's heading back to the office. Now I'm gonna go over the grant program.
Hang on one second, let me pull up that slide,
And I'm waiting for my assistant to pull up the slide.
I think.
Vanna.
I think I'm doing it. Hang on,
Yeah, but thank you guys for having us. today.
Thank you.
Yes, absolutely. Good meeting you. Yep, you got it, brother.
if I'm smart enough to do it.
And the no deal left behind while she's bringing this up.
Is it up there?
Basically, they,
Okay,
uh,
I don't know if,
Joe, our owner,
I
and,
don't think it happened.
came up with all the
Yeah.
vice presidents. He's like, okay, this is a lot of information for any loan officer to memorize all the guidelines for this.
is that sharing
I'm
that?
gonna put together a team, so he put
Sure.
together like 3 or 4
Haha.
really senior loan officers similar to Brandon. And said, if they can't make a deal work, I wanna have a pool where they send it to you guys, and you get back to them within 24, 48 hours. See if you can come up with a solution, and then we can let them do it, or we
I
can
did
do
it.
it, depending on if we're comfortable doing that type of loan. So that's just another level of commitment, like the cash to keys. Now the non-QM, we're really trying to expand our guidelines and our opportunities for you guys to make sure that you don't lose the deal. So, can you take me back to my email first?
What?
The email I sent you. Oh, you just put the slides in here?
Yeah.
Okay, alright, so. I don't know what order these are in, so we're gonna go in the order. So we have the Peninsula, we have Suffolk,
That's Suffolk.
we have Central, which is Chesapeake, Isle of Wight, and Portsmouth. All have different grant programs. Then you have Norfolk that has that grant program that everybody's blasting out there, right?
This is all you sent me.
They're all the similar things. They all have 3 common denominators. One, it's
Goodness.
income based, meaning you only can go to a certain level depending on the number of people that are in the household, and you have to use complete household income, and they do collect tax back, okay? We also need to make sure that that it meets all the requirements for their specific. So let's go ahead and Suffolk does 14,500. Go ahead and flip the next form, please.
That's the
That's
one,
this one.
yeah, that's.
So
this one.
these are, nope,
So,
no, go back
it's-
right here. So Suffolk for 2024 was one person was 56,400, okay? 2 people, they're married, or they have a child, 64,000. 3 people, so on, right? So what we do is we qualify. We take a normal application, just like normal, and I evaluate every borrower for this. I'm actually on the VHDA's top list because I send so many people to this because a lot of people don't have the funds anymore that they didn't have before. So we have to make sure that the front end is roughly around 33%. Front end means basically the housing ratio to their gross income. And their back end, depending on the city location, because everybody has a little different variation, is 42 to 45 depending on the city, okay? And so that's the back end. So that's the housing, and then the housing and their debt on their credit. And so we have to make sure it falls in.
When you say people, does that mean any like literal living human, or can it be like baby is kind of what I'm thinking?
Yes,
And that,
yes,
so that,
yes.
because I know like,
Absolutely. So let's say you and I just had a child.
Right.
It's not our tax document, so it only shows there's 2 of us.
right,
So we would show the birth certificate showing that we just had a child. So all of a sudden we have a
and that's,
household of 3.
okay, cool,
So now we go to household of 3 income.
got it,
Make sense?
Yep.
If you have 22-year-olds living with you because this generation doesn't know how to leave home and they have a job, you have to count that.
Don't talk
because
about my
they're in
child
the
like that.
household. Does that make sense?
yeah, no, that's super helpful,
Unless
yeah.
you can prove, unless
There's no minimum
if
age
they're in
or
school
maximum.
or they're doing something else, then we don't have to count their income because, but if they're a full-time salary worker and they're just staying home with mom and dad, and we find out they're staying home with mom and dad, you're still claiming them? That's information that I don't wanna know, but if I do know, I have to disclose, right?
So if they don't claim.
Hang on one second, there's a question in the chat from Jen, and it says. Must be built after 1978 question mark.
Depends on the loan type.
It depends on the loan type,
These are
Jen.
all, this has nothing to do with that. You have FHA, conventional, USDA guidelines, depending on what type of loan we have, depending on the type of the property, whether it's
Okay.
manufactured, whether it's, whatever type of property it is, we have to follow those guidelines. This is just for the grant program for the city. Now, some cities they actually do their own inspections.
Okay,
So if there's asbestos and all that stuff, from all that stuff, they're more than likely not gonna sign off on this house. Right, so remember, you're buying a house, we can actually tie this in for the grant program. I've actually seen Cola actually mention that she's actually tied one of these in to her program. I mean, that's layers, so that's not a 30-day close, so just remember that, you got like 15 different people, but. All this applies, this is just a source of funding, this is what this is. So,
Okay,
First
so
quotes when I analyze, so we're gonna go through all the cities.
Jen
and
said,
then-
oh, okay, I just saw it said it must be free of lead paint.
Yes,
Yes, that is correct, Jen.
so every city has their own specific requirements, okay? But really, for the 7 minutes that I have, I wanna just do the general overview of each city, so we can get through them, and then
Hang
we'll
on.
go from there, so
All
let's go
right,
to the
we're gonna
next
be a
one.
little bit. I gotta get it back up. I don't know if I don't know what's gonna happen here in a second.
Well, I'm gonna go ahead and just talk, I can talk about it.
Go ahead, you're good.
Okay, so
Do what
you
you need to
have-
do.
Chesapeake, Isle of Wight, and Portsmouth, right? They do 25,000. Okay, so that's a
I
big
missed
deal,
one
right?
of them.
That covers down payment, that covers closing costs, that may even buy the rate down.
I
Each one of
missed-
these programs requires your buyer to bring 1% to closing.
Cause one of
But
them
that
didn't
1%,
open.
let's say they're buying a $2,000 house. You gave a $500 E&D, now the client's
Sorry,
down to
guys,
1,500.
two of them didn't
They
open.
paid for a home inspection, it was $400, where you typically can't give them credit on a normal loan, we give them credit towards that 1%,
Nice.
we just need a receipt. So now they're down $400 plus 5, now we're down to 1,100,
The appraiser.
There we go.
that's part of the loan process.
Phew.
Had-
There's
So
Chesapeake.
now you're down to $1,100, but they just got
Share.
25,000, plus they got 2.5% from VHA.
Share.
So they have like 11,
There you go.
12% of their ownership of their house.
Here you go, Bill.
Now, is this a $400,000 house? No, but it's their first house. All right, so first time home buyer, couldn't have owned a home within the last 3 years. The cities do make exceptions to this. I had one where there was a situation where the woman was getting out for her safety. And they made an exception because we got her off title. And said when they did their look and she wasn't on title, they were fine moving forward and letting her move forward with this program. So we all have to complete a VHDA class, which whether you're doing VHDA or the grant, they still require it because they want you to be first time home buyer. Why do they have a second inspection? They have a little higher limit, if you notice, than something by about $2,000. This income is the same for Pocosin. There's a group of, but they only do, I think it's 14,005. Anyway, it's on the flyer and we'll get to it in a second.
Mhm.
But they all use roughly the same kind of scenarios. They require the same kind of documents. They require you to go to the same kind of classes. So when you have a buyer, you don't have to ask, hey, Bill, give them the grant, give them this. I'm looking at everybody to see if they qualify for it when I do every approval and every application. Because if I can get them free money, remember, my mother never bought a house. We moved 6 times since I've been in 3rd grade. I was a laughing stock, amongst my friends who never had a home. And I look back and the banks could have helped my mom. So I love what I do. And I love putting people in homes, especially first time home buyers for this kind of program. North Carolina, if we have anybody on North Carolina, there are grants down there. You can get up to $15,000. You can do a 3% down payment. I can help you down there too. So there's lots of options there. So flip the screen.
I can't flip the screen. That's
Uh,
not how you send
All
them
right,
to me.
go to, okay, so this is. If you notice, this covers James City County, York County, Gloucester, Pocosin, Williamsburg. How many people have never done anything up there because you didn't know they had those grants? They do. And it runs through the same kind of process. Most cities, except for Virginia Beach, have something like this. Welcome to Virginia Beach, everybody. If anybody's from Virginia Beach City Council, listen to this and change the rules. Now, the latest thing is Norfolk. Everybody's hearing about Norfolk. There's a $60,000 grant and there's a $40,000. There used to be a $40,000. Well, actually, there still is a $40,000 grant and there's a $60,000 grant. You have to meet the AMI requirements for the $60,000 and it's unlimited anywhere in the city. For the $40,000, it's 3 specific neighborhoods or 4 specific neighborhoods that you have to move in and do that. And so
What?
when we're, hold on. You know, have you ever been at a dinner table when you're trying to finish your sentence and then all of a sudden,
The kids are like, but that.
I'm like.
Are we there yet?
Yes, ma'am.
What's AMI?
AMI will be the average income for the area median, for that location. So, it could change within the city per zip code. So, you know, we have to run it, we have to see what they call. So if the client is paying, you know, making $90,000, and the average median was $80,000, they don't qualify for that program. Now, you can go down to there's another down payment program where you can go up to 110%. So all those details you do not need to know. What you need to know is that it's available.
Your phone number.
And what you need to know
Right.
is we can do flyers, we can do group flyers, we can do tag teams on co-marketing, we can blast it. So I gave in the email I sent out. To you guys that have like 4 or 5 different flyers on it, but we can do specific flyers. So if you have individual ideas, like if you are targeting Norfolk, or you're targeting Chesapeake and Isle of Wight, or you wanna do this or that, I can work with you one-on-one and we can definitely do all that. It's simple, it's just going to the system and creating a flyer, send it to you and we can blast it, okay? What really will grow your business is just knowing all these options are out there. I did not know about the non-QM world. I never danced in it till about 6 months ago. And I will tell you, it opens so many doors and it opens windows where you didn't see a door. So we are in an environment where people are struggling financially in the economy. We're in an environment where people are scrambling, trying to figure out how to make things work. And so we have plenty of options now to make sure everybody can become a homeowner. We just need to do our part and kind of put them in the right puzzle piece. Yes.
So if I hand somebody to you, I'm just gonna simplify this question. If I hand somebody to you and you find they qualify, can you then in turn tell myself or my client exactly what zip codes?
Mhm.
Okay,
Well, we'll look. You mean as far as for
Before
the
we start
Norfolk,
looking,
for the
yeah.
Norfolk?
yes,
Yeah, Norfolk would be the only one.
yeah.
And Norfolk
it's specifically Norfolk.
actually may just have it down to Norfolk County. They used to do zip codes. I'll have to check into it. Because literally, I don't do a lot with Norfolk. Because
Okay.
Norfolk says 30 days, but everybody I've ever worked with, and I do a lot of these, has taken anywhere between 3 to 6 months to get approved. They are very
Really?
slow.
Mhm.
Now, they are advertising and blasting 30 days. So I hope to God that they have just rehired a bunch of new people. They have copied the HRD in Chesapeake and Isle of Wight, and they are making it efficient in a flowing situation. Suffolk does a great job as well, because really, people don't have 6 months to wait.
Mhm.
You know, that's where they lose hope. You don't want to lose hope. Hope is what we hold on to. So any other questions? Well, first and foremost, thank you so much for everybody attending. And we will be doing this class again in the middle of the summer. But if you have individual questions, you can reach me at 757-353-1763. That's again, Bill Loudon, 757-353-1763.
Keep it that.
And I'll be
Oh,
more than happy
no.
to return your call and answer your.
Oh, there we go.
Awesome, thank you.
Anything else?
No, thank you.
All right, thanks everybody online. Appreciate you attending.
Type. I can't, oh wait, I didn't type it right. What is it?
And if you can give me a list
What's
of
your
anybody that's
number?
online, 757-353-1763.
Get 600 people on TikTok.
Hey.
So if you could text
Just
me,
FYI.
Nice.
everybody text me or email me if you want a flyer. Instead of me trying to reach the chat, you have my information, contact me individually. And let me know who you are and I'll make sure I can get the information
I
you're.
took it out before your phone number was on there, but that was just
Perfect.
because TikTok's crazy.
Thank you, Chrissy. Appreciate it.
Thank you. Started out with like 20 people, and then as it just kept growing, so